Hi guys, welcome back. So, if you're wondering who controls the FX market, it's such a simple question. It's mainly and predominantly the central banks. So, the central banks play a crucial role in controlling the FX market. When there's deflation, there's inflation, there are many levers they can pull in order to control the market. So, if you want to go through how they do that, you should read Ray Dalio's books, The Debt Crisis. It's like a four-part book. It's really, really thick. It's made up of four parts. And he talks about the imminent crash that's coming, and he explains how the money machine works, how these central banks all work, how they print more money, and then how debt cycles, and essentially how huge financial crises take place, so great depressions and things like that. So you can read his books. You can also watch his videos, how the machine works, how the money machine works. I think it's called on YouTube. He has a YouTube channel. You can go listen to that. So he talks a lot about that. But I think it's more that they have an influence on the FX market than that they control. Because a lot of the times you'll hear people say, like, big institutions like banks, hedge funds, um, they are the ones that are the smart money, and you have to trade like the smart money. And the reality is, no one knows. No one knows how they actually trade, because usually a lot of the times you hear like FX traders saying, "Oh, this is a stop hunt. This is how the big money came in." And in reality, none of them have actually worked in a central bank or in a hedge fund, so we don't know. I won't lie to you and say I know how they trade, because I don't know how they trade. All we can do is speculate, and be careful of speculations, because a lot of the times you may have another problem on your hands than the fact that someone's out to get you. When you're taking huge hits, it's easy to think that someone's out to get you, or that the big money is hitting people's stop losses. But in reality, we don't know. Do we know if they have some secret society and they share the same strategies and they trade the same? We honestly don't know. But what I do know for a fact, and just being watching these movies for the past few days, I've been watching Inside a Job. I watched The Big Short. I watched I forgot the other one, but it was based on a lot of the financial crises that have happened in the past few decades and things like that. And what you tend to see is that the big banks, so Citibank, Goldman Sachs, J.P. Morgan, they have been responsible for a lot of the crashes. And in being responsible for a lot of the crashes, they have over leveraged, they've gone bankrupt, gone bust, and you see that governments always come in to bail them out. And so they're never really in a better position, because a lot of the times everyone's like, I want to be an institutional trader. And in reality, they are causing financial crises. They are not even producing results. Warren Buffett has always talked about hedge funds, that they are outperformed by the markets. Meaning, if you just put your money in the markets and you just hold, you outperform someone who's a hedge fund. And there's a book about this, about a monkey on Wall Street, which was asked to pick the next biggest stocks. It outperformed all the hedge funds and all these people with their fancy degrees and things like that. So in actuality, they don't know either. If you watch the documentaries on like Goldman Sachs, they take money from sovereign wealth funds, right? So governments create their own trading accounts. If you didn't know, they're called sovereign wealth funds. They create their own accounts. You can Google them. It's actually very interesting. You can Google them, and there was actually a UCT student who's been writing about sovereign wealth funds and how that can solve South Africa's problem. I forgot his name. Yeah, I forgot his name. But they essentially take these sovereign wealth funds' money and they blow that money. I mean, they've lost billions and billions. They've lost over 98% of the account. So you can imagine to yourself, if someone is in an institution or a hedge fund and you're looking up to them and you're like, how do I trade like them? In actuality, they make a lot of losses. They go bust. The only difference is you don't have someone who's going to bail you out. They always have someone who's going to bail you out. So realistically, don't always look up to them like they're gods. They don't outperform as well as you think. Obviously, they're the exceptions, like the Ray Dalio and them. And another difference is that they always take their fee. They always make their 1%, their 2% fee. So even if they don't perform that year, they always take their money out. If you don't know, try Coronation in South Africa. Try putting your money in a fund like Coronation, and you'll be very disappointed. I know someone who did this last year. She was managing her own money, right? So she had like, I don't know, 300K that she was managing of her own money. and then she put some money into Coronation, about 100K into Coronation, and thinking that these are hedge fund guys and these are people who are gonna outperform. They performed poorly. She lost more money than she had actually invested, and she still had to pay them their fees. So be careful about institutions and hedge funds and trying to look up to them and believing this idea that the reason why you're losing is because hedge funds and big institutions are knocking you out. So thanks, guys.